You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Thursday, May 2nd, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Thursday. The first thing to know is the dollar breaks its losing streak as the Fed pats away growth fears. The dollar firmed and bonds and stocks sold off overnight after the Federal Reserve signaled there would be no knee-jerk interest rate cut, despite signs of weakening inflationary pressure and a browbeating from President Donald Trump. The Fed's belief that there's no need to act will be tested by a series of data released over the next 48 hours with jobless claims and labor cost data due at 8:30 a.m. Eastern earlier today. It's out already. Factory orders at 10 a.m. That's out already. And vehicle sales at 3:30 p.m. This is all apparently Eastern time. They'll be followed on Friday by the monthly employment report for April. Second thing to know today is Wall Street is set for a rebound. This is pre-market. Got it and then got it taken away. Wall Street was set to rebound from its post-Fed losses when it opened this morning, supported in part by a CNBC report suggesting that the U.S. and China are aiming to wrap up their talks by May 10th. Chip maker Qualcomm is likely to see active trade after reporting last night when it predicted a weak quarter due to the Chinese economic slowdown and the slow take-up of 5G technology. Other names of note to report Thursday include biotech company Gilead, games maker Activision Blizzard, and chemical giant Dow, as well as Expedia and Under Armour. Third thing to know is oil prices slipped on record U.S. output and stock build. Crude oil prices fell below $63 a barrel after a stronger than expected rise in U.S. inventories last week that left them at their highest in 19 months, coupled with the Fed's reluctance to engage in pump priming the global economy. Government data released Wednesday also showed U.S. output at a new record high of 12.3 million barrels a day. The increase in U.S. supply has largely outweighed production cuts by Saudi Arabia and others so far this year, although markets continue to price in a geopolitical risk premium as President Donald Trump tries to close the loopholes that allowed Iran to keep exporting some of its oil until now. Fourth thing to know today is the Bank of England meets as Brexit tensions rise again. The British pound is on the rise again amid reports that the two main parties are closer to agreeing to a form of Brexit that would remove any need for a second referendum on the issue. In addition, the Bank of England's Monetary Policy Committee is expected by analysts to talk more openly about future interest rate hikes after its policy meeting today, although it is expected to keep its key rate unchanged. Data released earlier showed the construction sector returned to growth again in April, The BOE's statement is due at 7 a.m. Eastern. Prime Minister Theresa May's rapprochement with the Labour Party has depended in large measure on accepting its demands for a customs union with the EU, something despised by the Conservatives, hard Brexiteer lawmakers, and the party membership. It's not clear whether the Conservatives will let May stay in power long enough to push that idea through, and local elections across the UK are expected to result in heavy losses for the party, creating the pretext for another attempt to unseat her. The fifth thing to know is beyond bullish. That's the headline, beyond bullish. Okay. Investors continue to lap up high-profile IPOs from startups with little or no profitability. I've seen this movie before. Vegan burger maker Beyond Meat has priced its initial public offering at $25 a share, at the top of a range that was already raised due to high investor demand. The company also increased the number of shares it intended to sell by 10%. The deal values Beyond Meat at $1.5 billion. Our second story today is also from investing.com. Tesla seeks up to $2.3 billion from share and debt issues. Tesla Inc. launched new issues of shares and debt worth more than $2 billion on Thursday, with Chief Executive Officer Elon Musk pitching in $10 million as the electric car maker gave in to Wall Street pressure to bolster its cash reserves. Analysts have been predicting for months that Tesla would need to raise funds for its expansion plans, which include the construction of a factory in Shanghai, the upcoming Model Y SUV, and the crucial ramp-up of Model 3 sedan productions. Shares in the Silicon Valley company rose more than 5% on the news of the capital raise plan, which follows Musk's hint last week that a fundraising was imminent after Tesla lost $700 million in the first quarter. The company said in the filing it would seek to raise $650 million in new shares and $1.35 billion in debt, with underwriters having the option to buy an additional 15% of each offering, potentially raising the proceeds by to $2.3 billion. Our final story today is from investing.com. It's an exclusive. U.S. legislation aims to thwart China's electric vehicle dominance. A U.S. senator plans to introduce legislation on Thursday to streamline regulation and permitting requirements for the development of mines for lithium, graphite, and other electric vehicle supply chain minerals, part of a plan to offset China's dominance in the space. While Tesla, Volkswagen, and other electric-focused automakers and battery manufacturers are expanding in the United States, they are reliant on mineral imports without a major push to develop more domestic mines and processing facilities. U.S. Senator Lisa Murkowski, chair of the Senate's Energy and Natural Resources Committee, told Reuters she will introduce the Minerals Security Act alongside Senator Joe Manchin. Our challenge is still a failure to understand the vulnerability we are in as a nation when it comes to reliance on others for our minerals, said Murkowski, a Republican from Alaska. China already dominates the electric vehicle supply chain. And that, ladies and gentlemen, is news you can use for today, Thursday, May 2nd, 2019, your Options News Rundown. I'm Dan Passarelli, trade smart, and have a great day.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.